Now, this story is by Bix Weir, and you're probably going to want to stay to the end of it. The title is Sell It All: 20 Reasons to Sell Your Entire Stash of Physical Silver, submitted by Bix Weir. Make no mistake, I'm a rabid silver bug. I've written countless articles on why silver is the number one best investment in the history of investing. There's nothing, and I mean nothing, that even comes close to the supply and demand dynamics, investment fundamentals, investor participation ratios, fraud manipulation realities, monetary importance, or even national security issues, and all these support a hyperbolic move to the upside for the price of physical silver in the very near future. The truth of the matter is, buying physical silver can completely change your financial reality. Having said that, it doesn't mean that there will never be an appropriate time to sell your physical silver. The cardinal rule of smart investing is to not get too emotionally attached to your investments and to rationally think through your investment reasoning. After you have outlined your reasons for investing, you should keep track of whether or not those reasons are still valid. So, in that spirit, I've listed 20 issues I monitor related to my original reasons to invest in physical silver. After a good majority of these expectations are fulfilled, I will seriously consider selling my entire stake in physical silver. Here's the list in order of current importance. Number 1. The removal of the gigantic concentrated short position on the COMEX silver market as reported in the CFTC Commitment of Traders and Bank Participation Reports. Number 2. The announcement of charges filed by both the CFTC and the FBI against these banks for silver market manipulation. 2. The shutdown of the iShares Silver ETF, SLV, and the subsequent attempt by SLV investors to transfer their physical silver into their own possession. 4. Implementation of COMEX realistic position limits in silver of no more than 1,500 contracts and the enforcement of the Disruptive Trading Practices Law. 5. The winding down of the outrageous and manipulative silver derivative positions held by J.P. Morgan and Citibank, as reported by the U.S. Office of the Comptroller of the Currency. 6. Mass redemption of paper silver currently held in pooled silver accounts and silver certificate programs into physical silver held in the possession of the owner. Number 7. The silver to gold price ratio reflects the true physical relationship between above ground gold and above ground silver that is available for sale on a free and open market. 8. The realization by industrial users of silver that the supply of physical silver is rapidly depleting, and with the future of producing their products in jeopardy, they begin stockpiling physical silver. Number 9. The reversal of silver's ever-increasing use in industrial applications due to either high prices or the discovery of a viable substitute with similar physical properties and attributes. Number 10. The realization by the remaining 99.9% of the investing public that does not currently own any physical silver that it is extremely undervalued and should be held by all investors interested in portfolio safety and value appreciation. Number 11. Acknowledgement by the bullion banks and U.S. government that they have been involved in the price suppression of silver for over 50 years in order to support and extend the global confidence in the unbacked fiat U.S. dollar. Number 12. All silver statistical reporting companies have completely revised their historical numbers to reflect the true supply-demand realities of the past and admits a massive annual physical silver deficit going forward. Number 13, the USGS alerts the world to the reality that the real current silver consumption rates, there is less than 10 years of known below-ground silver reserves remaining in the world. Number 14, realizations by investors that significant increases in the price of silver would not curtail industrial demand, as silver is mostly used in very small amounts in each product produced. Number 15, the mainstream media highlights that the investment drivers for silver far outweigh the investment drivers for gold. Number 16, the U.S. Mint starts to produce U.S. Silver Eagle coins in quantities sufficient to meet demand and no longer illegally rations their dwindling supply. Number 17, when investors stop saying that silver is too hard to store and start worrying that silver is too valuable to leave in a bank's safe deposit box. Number 18, when central bankers around the world stop printing money every time there's a bump in the road on their never-ending quest to foster perpetual growth and end the extraordinary transfer of wealth from the many to the few. Number 19, the U.S. government and the citizens in the United States recognize and acknowledge that Article 1, Section 10 of the U.S. Constitution specifies that only gold and silver coin can be legally used as money, and the Coinage Act of 1792 defines the U.S. dollar as 371 grains and 4/16 parts of a grain of pure or 416 grains of standard silver. And finally, number 20, the price of silver has risen so high that it has fulfilled all my hopes and aspirations as an investor, and I can now sit back and enjoy those other pleasures in life that I had put off in pursuit of freeing the silver market from the clutches of manipulation. So there it is, the list of events that must take place for the fulfillment of my silver investing motivations. Make no mistake, the price impact to silver when each one of these events takes place will be stunning, and sooner or later they will all take place. Once these are fully addressed and reflected in the real fair market value of silver, I will sell all my silver in search of the next best thing. Before then, I ain't selling an ounce, and you can take that to the bank. Bix Weir. I thought that was cool. Anyways, take care, guys. Keep stacking.